Hello there, welcome to Global Business Today. I am Yemisi Lanrido. We'll kick off in Egypt now, where the country is still aiming for renewable energy to reach 42% of its electricity generation mix by 2030. But that goal will be at a risk without more international support. And that's coming from Prime Minister Mustafa Madbouli, who told the COP29 conference on Tuesday. According to a July cabinet report, currently solar, wind and hydropower make up only 11.5% of Egypt's electricity generation. The country has in recent years relied heavily on natural gas, which it defended during the United Nations COP27 conference in 2022. And I quote, it says transitional fuel at a time when it was a net exporter of gas. But last year, Egypt faced prolonged power outages as natural gas production was hit by financial constraints and declining local extraction. And that prompted a government search for foreign investment in renewable projects alongside increased fossil fuel exploration. Well, in Uganda, Finance Ministry there says it will cut external borrowing by 98% in the financial year to June 2026, and that's to reduce its increase in public debt. Uganda's public debt, which rose to $25.6 billion in June this year alone from $23.7 billion early last year, according to Finance Ministry data, has elicited anger from Uganda opposition politicians and also triggered credit rating downgrades. The government says borrowing has been used to drive economic growth, which has been faster than many of its African peers since the COVID-19 pandemic. External borrowing will decline to just 29.9 billion Uganda shillings. That's about $8.15 million, down from 1.39 trillion shillings. The ministry confirmed that. Well, in September, the ministry said it planned to slash overall spending by over a fifth to 57.4 trillion shillings in 2025-2026 compared to 72.1 trillion shillings planned for the present year. Well, Chad said it has approved the licensing of Elon Musk's satellite internet provider Starlink to improve access to internet services in the Central African country. Starlink, the satellite unit of SpaceX, operates in several African countries but has faced regulatory challenges in others and resistance from state telecoms monopolies. The latest World Bank figures show that only 12% of Chad's population had access to internet in the year 2020. Kenya's biggest telecoms firm, Safaricom, earlier urged regulators to consider requiring satellite internet providers such as Starlink to partner with local mobile network operators there. Well, in Southern Africa, precisely now Zimbabwe, the minister has been speaking on tackling the country's power shortages, where Zimbabwe is struggling to get independent energy products built to help ease a prolonged power shortage due to lack of funding and economic instability. The Southern African country, which battles lengthy power blackouts, generates about 1,200 megawatts of electricity, mostly from its coal-fired Hwange plant, against peak demand of nearly 2,000 megawatts. But the Minister of Energy and Power Development, Edgar Moyo, has been speaking about the future of energy supplies, the affordability, as well as the issues of emissions at the Abu Dhabi International Petroleum Exhibition and Conference, APIDEC, held recently.
As Zimbabwe, we are very concerned about the issue of energy security, number one, and energy access to the entire population of the country. And what we are doing currently is to encourage investment by the private sector into the energy sector. For most of the time, a few years back, it has been government responsibility to ensure that energy is supplied in the whole country through a government utility. But we've now changed our regulations and opened up the sector to private players. And we are encouraging all those who would want to invest in the energy sector And we are saying that there is a lot of opportunity in that sector because of the supply-demand gap. So the market is there, the market is mature, and we encourage people to come in and fill in that gap. And we think that is going to ensure that access to energy services in the country is going to increase. And our target is by 2030, we must have universal access to energy services in the country. Yes, true, coal is our dominant engine for the supply of power. But however, with the current thrust towards reducing carbon emissions and to mitigate on climate change, we are now moving towards renewables. And one of the key renewables we're looking at is solar. And we have developed government implementation guarantees to the private sector for independent power producers to come into the sector and ensure that the contribution of solar to our energy mix is enhanced. To ensure that that is catalyzed, we have asked mining companies who are consuming about up to 25% of the total energy that the country generates. We've asked them to develop solar projects and generate their own power from solar. And that is happening very well. We gave them a deadline of the end of 2025, and we are sure they are meeting that deadline.
We're still talking energy issues, and back here in Nigeria, the national grid has shut down for the 10th time this year alone. And the federal government in charge of the transmission company has accused the distribution companies of not having the capacity to take on enough power on its infrastructure. But who is to blame? Earlier on at this morning flagship program, former chairman, Nigerian Society of Engineers, the Ikeji branch there, Engineer Akitayo Akitola, spoke on the issue of the incessant collapse.
What we've been having in the past that if they want to transmit more than 5,002, the system will collapse. So it has been a struggle for them to transmit. Is our transmission getting to that level that it can transmit 8,000? Then, if you take it bit by bit, the generating the GenCos, how much can they produce? They said they are producing less than 50% of their capacity, or because the transmission cannot transmit beyond that. So now those ones with the off-takers, who are the distributors, the DISCOs, they too have their own problem. The major problem of the DISCOs is that they refuse to do what they're supposed to do. What stops each houses to have a meter? What stop? You see, they still want to continue to fall on their past, thereby collecting what they call metering, collecting money without estimated bills. And now, when they started these, what's called Band A, the Band B, up to what we call in some areas we call it bandit, because when you are collecting money which you don't deserve, that is bandit. Some areas are bandit area. They intentionally leave them that area. Why? Because they just want to continue to reap where they do not sow. When you start charging somebody 50,000 naira, one bedroom apartment, 50,000 naira every month, is that not banditry?
Well, however, the spokesperson of one of the distribution companies in Oyo State, Southwest Nigeria, Busola Mituashe, countered the accusation.
National grid collapse, which sits directly with the TCN. So that is not the question here. If metering, how will metering affect the management of the system? If you understand how the sector works, you have the generation, you have the then you have the distribution. So the topic we're looking at today is the wires that gives light to the people, that offtake from the generation to the people, that is the distributors. So really, the issue of metering does not arise here. However, I will address that. But let's look at why we have incessant system collapse. And I will speak as a distributor and you do the math. When we privatized the sector, we inherited liabilities and assets, no doubt about that. But since we came on board, IBEDC, for instance, had done what we call system upgrade, network upgrade, up to the tune of 5 billion naira, and we do that almost every year. So that means we realize that the system, the network, there are a lot of dilapidated infrastructure. So it's our job to do that. And if the TCN, which is our counterpart, is not doing the same, then there will be a lacuna. Then another issue we want to look at is the issue of population growth, which might be a national issue, really. The wiring and the system that we have in place in Nigeria now, I'm not sure that system took into cognizance the population growth of Nigeria as we speak today. That's an issue. And another key point is the issue of vandalism, where the bandits, like I said, who will devise the system, the wires, the poles, the feeders. And this issue of vandalism doesn't even end with the TCN. It is even perpetrated with the discos as well. Even where the so-called meter that my engineer is talking about have been vandalized by customers.
Well, the Crown Prince and Prime Minister of Saudi Arabia, Prince Mohammed bin Salman bin Abdulaziz Al Saud, has assured Nigeria of support in its ongoing economic reform programs. The assurance came when the Crown Prince and President Bola Ahmed Tinubu met in Riyadh on the sidelines of the joint Arab-Islamic Summit. The two leaders explored potential areas for cooperation, particularly oil and gas, agriculture, infrastructure, and the constitution of the Saudi Business Council. Nigeria wants an agreement with Saudi government over a proposed $5 billion bilateral trade facility between the two countries. The Saudi's Crown Prince also assured Nigeria of his support and promised to motivate his team to realize the various areas of partnerships discussed at the meeting. Well, to Nigeria, Yose Bamokwina Zhao has called on Nigerian investors to explore investment opportunities in his country. The envoy made the call in Abuja, Nigeria's capital, at Angola's National Day and the 49th independent anniversary. While speaking at the commemoration, the ambassador stressed on the need to strengthen economic, political, and military cooperation between both nations, while assuring Nigerians of a better investment environment. On bilateral relations with Nigeria, the envoy said, and I quote, "Our brotherly and cooperation with the Federal Republic of Nigeria have lasted more than 60 years, dating back to the beginning of the armed struggle for national liberation for the independence of Angola, end of war, and peacekeeping through the United Nations. Angola is known to have engulfed in armed struggle for national liberation, which came to a halt in January 1975 following the change of government in Portugal." You're watching Global Business Today. Japan's wholesale inflation recorded fastest annual pace in October. We'll bring you more details in a moment. This is Global Business Today. Microsoft President Brad Smith at the Web Summit in Portugal, Lisbon, has called on others to build a new AI economy. Well, he was adding that it could be the world's next industrial revolution. Smith insists that this revolution must be responsible in terms of safety, privacy, and the environment. Organizers of the Web Summit says the gathering, which will run on Thursday will bring together about 70,000 attendees with more than 3,000 startups and 1,000 investors.
We have the opportunity together to build a whole new AI economy. But we have the opportunity, I think, to do even more than that. We can build the world's next industrial revolution. But as we do that, I think the other thing that unites so many of us is a belief that we can do this better than it has been done before. How do we do that? Well, we commit ourselves to not only growing and doing well, but also doing good. And that means investing in trust, as this last panel just discussed. It means making security and privacy and safety and responsible AI priorities for each of us, so that the public can use what we create with confidence. It's not just safely. And it's why part of our work as a community is to build out an AI governance regime for communities, for countries, for the world, that start with what we do as individual firms, that will build on industry standards we create, that will require national and international and even global policy. We need to build an industrial revolution that is sensitive to the needs of the planet. We can't afford to just build data centers and consume electricity without regard for what it means for a local community or for a country or for planet Earth.
UK Prime Minister Keir Starmer has launched a capital market mechanism that will encourage private finance to ramp up green investment in poorer countries. The move is set to show the UK's commitment to be one of the world's climate leaders. Starmer spoke at a roundtable meeting with global finance leaders at the COP29 Climate Change Conference in Baku, Azerbaijan.
It is really fantastic to launch today this capital market mechanism, part of course of the climate investment funds, and located and listed, and I'm proud to say, in London, and so it's a special moment for us. This initiative, which is of course mobilising private finance to go alongside public, is at the heart of our shared challenge in the fight against climate change. We will all need to be innovative, and I think that's a theme of this COP, innovative and ambitious in meeting the scale of what is needed. Public finance on its own will not be enough, and I think that's a really important part of our messaging and our challenge, and we need to break down the blockers so we can unlock private finance, and that means working together. First, to match national plans and projects to international finance. London, of course, is one of the world's greatest financial centres. It's already playing an important part in scaling up green finance. I want us to be bolder, and I see London as the green finance capital of the world, retaining and reinforcing its #1 ranking in the Global Green Finance Index. And this mechanism today is an important part of that, to make good on the UK's commitment to be one of the world's climate leaders, and most importantly, to finance the countries and the people who need it most.
Leverage is going to be really important. Relying on donor money all the time to try and make this work is the wrong way. It's the right way to create a foundation, but we have to create leverage from the private markets. And
staying in the UK, located on the southern bank of the River Thames, surrounded by high-rise buildings glinting in the autumn dawn, New Covent Garden Market is the largest of its kind in the United Kingdom for fruit, vegetables and flowers. Well, London's historic fruit and vegetable market in Covent Garden moved from central London to the southwestern suburb of Battersea on November the 11th, 1974, and that's in a bid to expand and modernize. Well, for its 50th anniversary, wholesalers share their memories of the market over the years.
So just summing up, New Covent Garden, what does it mean to me? It means everything. I've given up, spent a lot of time that I should have been spending with my family in the market. We commit so much time, but the money we raise, the camaraderie, the passion, we'll have customers walk up and they will literally walk up and down, up and down, up and down to save a few pennies.
It's very important because what it's showing is continuity. I mean, this market has actually existed for hundreds of years, but 50 years ago it moved from central London to here, and you can see around you now is a thriving market. But what we're trying to do is to make sure that it stays thriving and it's fit for purpose in the 21st century. We serve almost every major restaurant, Michelin star and upmarket restaurant in central London. We serve hotels and really high-end caterers who do things like weddings. At the height of the business, 2,000 people are working in this marketplace, and what's so extraordinary is they're working at very odd hours, so they're here at 2 or 3 in the morning. By 10, 11, the market's empty. The only people here are the people clearing up, who are recycling goods and services. So by about lunchtime, it looks as if nothing has happened, and then amazingly, it blooms again.
We got our first lot of Christmas trees in about a week and a half ago, and they all sold out. This is very small, sort of easing us into Christmas. If you come in December, this whole place is like Santa's grotto. It's weird. It's really weird, but it's great fun. And you always leave covered in glitter, so yeah, it's really good.
Japan's wholesale inflation accelerated in October, the fastest annual pace in more than a year, as renewed yen falls pushed up import costs for some goods, complicating the central bank's decision on how soon to raise interest rate. The corporate goods price index, which measures the price that companies charge each other for goods and services, rose 3.4% in October from a year earlier, when Bank of Japan data showed Wednesday above market forecast for a 3% gain. It followed a 3.1% increase in September and marked the fastest year-on-year increase since August 2023. The yen-based import price index fell 2.2% year-on-year last month, less than the 2.5% drop in September. Well, on a month-on-month basis, the index rose 3.0% after falling 2.8% in September. Well, a sign the dollar's 4.3% rise against the yen during the month kept import costs high for many firms. The BOJ ended negative interest rate in March and raised a short-term interest rate to 0.25% in July on the view Japan was making progress towards sustainably achieving its 2% inflation target. Well, to wrap up GPT, oil prices held near their lowest in 2 weeks Wednesday, a day after OPEC downgraded its forecast for global oil demand growth in 2024 and 2025, and amid demand concerns in China. Well, the Brent futures were up 49 cents to $72.38 a barrel, while U.S. West Texas Intermediate crude futures were up 48 cents at $68.60 a barrel. Well, crude oil prices edged higher as tightness in the physical market offset bearish sentiment on demand. But falling demand projections and weakness in major consumer China continued to weigh on market sentiment and crude prices. Well, that's it on Global Business Today. Don't forget you could also get more stories on our content hub at www.ln247, as well as our social media handles. I am Yemisi Landre Ido. I'll see you again.